Hello, today is Tuesday. It is the 17th of July 2012. This is the second silver update for today. And we're going to look at the daily chart, some shorter term charts, and an archive chart as well. Now, looking at the last few periods, including today, it has been a volatile figure things out, which is what I use within these bands, or how I can read what's going on, because it's trading back and forth within it. That's neutrality. Above it is bullish, below it is bearish, basically. So therefore, with that being said, it's going to be easier to take a look at this within the shorter term time frame. Now, I've been talking about this high and this low before, and I was able to, in the past, back here, show the 5-hour chart. Well, enough days have went by where I can no longer show point A to point B using the 5-hour. So let's bring it to the 7-hour chart and take a look at it a little more clearly. The Fibonacci retracement was important starting on the rally higher because it calculates this high, it calculates this low. So on the first level of Fibonacci retracement, it's where it stabilized, stayed there for, well, I can see 5 periods, which is like 35 hours, basically a little over a day. Found immediate resistance in here. Again, it found a second level of resistance at that line. You can see here that the line found some support, stabilized there for a couple of periods or little under a day. And what we notice is that this area was resistance, and then it started to make the pattern. There's the lower low, there's the lower high, there's the lower low. So it looks as if we're going to be making a test of the previous low in at 26.13. But what's happened is it's now matched the previous high now on 2 occasions, which is this high. It matched it here, and it matched it as well here, trying to really break the bearish trend being below the second line, that is. On the final candle, the one that pretty much ends at 3 p.m. Eastern Time today, it's got this situation here where it made this low lower than anywhere since it's been consolidating within this band. And now it's been resisting this area for quite some time, that logically speaking, if it can confirm, if it has some sort of breakout above this level, having a decent sized green candle moving it up to this previous spot would be pretty high. Also, when I take a look at this, oftentimes failed moves can create fast moves in the opposite direction. So if you can see a failed move before the fast move is to occur, well, then that can give you the advantage. And quite frankly, I see this as that of a failed breakdown. And for there to be a fast move, then that would, of course, just like before, be that green, or same thing, that big green candle that would shoot the price action above the 28 level. Let's even shorten this out some more and take a look at this on the 60-minute chart. And here we go. Now the Fibonacci analysis that I'm going to use is the most recent lows and the most recent highs. Yes, I could use this low, and there's a previous high at about 28.5 that I can use. So be it. The one I want to use is the short-term level for when you make this sudden move and you start to go higher. Then those are the important highs and lows as far as I'm concerned. After all, this high breached this high, and then this low breached this low, and now we've seen this low that breached that low below. So therefore, it did make the lower low, and it does not find resistance in here. None. And then it comes up to the second one. And when I don't see resistance there, which didn't occur, then really what I'm looking for is for it to either A, have an explosive move to the upside, or B, find support in this area, or I guess even C, pierce above this and then retrace with a price objective down to the next level. So with that being said, just by looking at this, I can see that it's now been support as I'm doing this for the second time, because this little period here, I can see that it obviously went up to 27.41 or something, and then it closed down here at the line. So just by looking at that in itself, this tells me that it broke barely above this, found support, and of course the last two candles represent the same thing. So you can basically see short term that it's a double top formation, but it's at this point finding support above this level. Therefore, when you're looking for this failed breakdown, you want to see first that it confirms holding above this level here. And because it's finding support there, at least on two occasions, any real break above 27.43.24 up to 2040 or up to 45 is going to lead the fact that it could very easily continue on that move that I was talking about before, up to the breaking 28 into 28.5 shown on the previous chart. Now there's obviously always going to be a lot of failed moves, for maybe this is setting up the next failed move higher. It's very difficult to point out. And we look at this again on the daily chart. We see now that it's been just doing a whole bunch of sideways nonsense consolidation ever since this bottom in here, as it's pretty much stayed in this band in here, a little quick break out, stays within the band, and then you have this breakdown in here, but it barely makes a lower low, and it's been staying within it again. So at some point it's going to have to make a decisive move, and it could very easily have those fast moves that break down below 22, 21 in a short period of time, because it's happened so many times before. And the opposite could be true for breakouts, having large up moves, where having a day where you gain $2 in 4 hours won't be a surprise. And at some point soon, I do expect those days to be coming. As far as the historical chart, this is going back to September 28th, 2011. And this is just an example of how fast this market can really crush itself pretty bad. Remember the last hourly chart, I was showing you pretty much a range of like in here somewhere. So obviously the volatility was much greater on this day, but you go from over 40 down to 26. And then boom, there's that fast break higher up to 33. And why I say that is what happens if, say, you do have that big fast move to the downside, say to within that 20 area. Don't be surprised if it has a high percentage move higher. After all, going from 26 to 33, that's a gain of over 20%. And this is on the hourly time frame. But it really wasn't anything special, because it had lost pretty close to 30% of its value in one small shot lasting just a couple of days, which is why it's important to note that if it goes from 20 back up to 26, oh wow, that's a gain of 15%. Well, I've seen it before. This is what it looks like. And that'll be it for today. And one more thing I want to talk about, as I was just thinking about some things to talk about within the videos, and let's talk about the bands, because these are not Bollinger Bands. These are just regular upper and lower bands that I have used somewhat simple calculations to determine where these are placed, as it all starts within this 18 average of highs, lows, and closes. And then it takes the volatility of the movement, so percentage moves from lowest point to highest point. And it takes the front-weighted average of volatility over the last 18 sessions, and that takes that volatility and I triple it. So if the average move in a period is, say, 1%, then I will triple it to 3. And that's the percentage move from the upper part and the lower part of the band. So it's always going to be the same within them, is the distance from the 18 average of highs to the upper band will be the same as the lower band to the 18 average of lows. That's mainly how it's set up. It's set up more aggressively, in my opinion, than Bollinger Bands, as it's a lot more difficult for these to hit. But this is a situation where it was like 1, 2, 3, 4, 5, 6 times it crushed this on the downside. and probably more within the regular Bollinger Bands, and then it came right back up to this upper part. So if we take a look at this, say on all the other charts, just focusing on the band, the only time we've been within this oversold or overbought was right in here. If we look at this on the hourly chart, as far as we've pretty much been oversold up to the top part of this band, close to the bottom part, and then again close to the bottom part of these bands. And then the 7-hour chart, there was obviously an oversold condition here, and that's it. Because there can be common times where you make this move up, not even close. Move down, not even close as well. But it does hit on several occasions from what I've noticed within this indicator. Thank you for tuning in.